The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 16 June 2023. Well, first off, there was a pause, so no interest rate increase. I am not looking for anything to the downside on interest rates for quite some time. They may pause again. I think they're going to lift more over time, and even when they do pivot, if that happens, don't expect to see the zero interest rate policy ever again. Cheap money is done. Money now costs, and because of that, the bond market's basically in a conundrum. Anything in the long end of the bond that have been purchased since interest rates started going up, that were bought with zero or very low interest rates, have to be discounted to the market. Although the Fed is giving loans at par, it's a loan. It is not paying you for the par value. It's giving you a loan. Moving on, gold at about a 3-week low here recently, and silver a 2-week low. They're in what I call the summer doldrums. I kind of expect sideways action unless we hit a black swan, which is always possible. Ted Butler put out a great article on SilverSeek recently asking, I believe, if the manipulation has ended or not. He makes his case. I've known Ted right from the beginning. In fact, I'm one of the first ones that reached out to Ted Butler when he and I were the only two on the internet really writing about the silver market. Regardless, he does make some key points, but I'm not exactly in agreement with it, but I don't want to get into a big he said, she said. He does make some interesting observations. My view of what he said is all those things are factual. I look at it in a different way. I think that the reason that you're seeing such a low amount of open interest is because the powers that be know that we're down to like 27 million ounces of silver in the registered category. That's really all they have real easy access to. Yes, you could turn an eligible contract into a registered, but it's not that easily done, and most of the eligible is long-term holders. Moving on, I think I want everyone to take advantage of this 30-day free trial to the Morgan Report. You can see it on your screen now. And the reason I'm saying this is, one, I just did a property visit over in the Silver Valley, and they have a very interesting land package in the Silver Valley, very close to some of the biggest veins that are available to our knowledge at this point. On top of that, they also have a very significant lithium project, or potential, I should say, in Mexico. So this is one of those speculative situations. You can sign up for 30 days free. You can get that pick that will be out in next month's issue. And remember, this is a speculative investment. You bet a little to win a lot. You don't put a lot into it at the beginning. You only add to it if there's a material change in the company.
There is nothing more critical to your financial future than a sound money system. This is the premise of the Morgan Report. To understand where you are going, you need to know where we've been and why our current monetary system is crumbling like a house of cards. More importantly, you need to know how to build and preserve your wealth even in these uncertain market conditions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history. Will you be in when it happens or sitting on the sidelines wondering what just happened? Join our free email list at themorganreport.com. Become informed, awake, and aware.
And lastly, gold or gold stocks. That argument's gone on for quite some time. And the answer is if you do it correctly. If you bought gold at the top of the market, and there is a recent high, but you bought it the 2011 high in September, you paid roughly $2,000 an ounce, more or less, so that's a little more than $2,000. At that time, our top tier cash-rich royalty company has tripled from that level, the stock price, to where it is now. And yet gold is just now making it back to the 2000 level. So in that 12 years, you would have tripled your money in a gold stock, a royalty company stock, I should say, versus if you'd just been in the metal. They complement each other, I really believe, and always have, and made my life's work all about the resource sector, primarily the precious metals, and why owning both makes the most sense. It's David Morgan from themorganreport.com. I'll be back with you next week. Until then, remember, there's nothing more powerful than the truth.
What if I told you that you could go broke in less than 24 hours? That's how long it took for the Dow Jones Industrial Average to plunge by nearly 22%, losing investors billions overnight. The same happened to the FTX crypto exchange and Terra Luna stablecoin. Both crashed overnight, losing crypto investors billions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history, and you must understand the following. You can absolutely go broke in one day. We've been helping subscribers weather this economic mess for years. Now it's time for you to get the same insights. What really happens during a major collapse is that the wealth changes hands. You will actually benefit by looking ahead and knowing exactly how to build and preserve your wealth. Putting just 10% or 20% of your wealth into our approach could make all the difference in your financial security and peace of mind over the next few years. Discover the Morgan Report today. Visit our site at themorganreport.com.